In this video, we're going to cover the futures market. It is Thursday, June 20th, 2024. Guys, I'm making this video pretty late. We're actually about to be on Friday, June 21st, 2024, so I'm going to make this video pretty short. Guys, this is R Trades here, back with another financial markets video. As a reminder, if you like this content, if you want to support me and support this channel and make sure that I can afford to keep making these videos, please make sure to use the affiliate links in the description box below. You can find affiliate links to Apex Trader Funding, Topstep Trader Funding, The Trading Pit, and others. In addition to that, guys, if you please make sure to like, comment, and subscribe, that makes sure that I can make this dream come true. Okay, guys, I'm going to go through some of our headlines. We don't have a whole lot here for June the 20th, but what we do have, I'm going to get through. So with that said, I'm here on Financial Juice. We can see that this morning the Bank of England bank rate actual was predicted to be 5.25% and then came out at 5.25%. Had an immediate downturn here on the pound dollar, and then it went right back up. So in addition to that, Swiss interest rate actual 1.25%. Forecast was 1.5%, and the previous was 1.5%. So a couple of our Forex headlines there. Some of our news headlines coming out. Let's see if there's anything terribly interesting here. Markets on intervention watch for USD JPY and USD CNH, which is the Chinese onshore yuan. Quote, I know we are all tired of hearing about, quote, possible intervention, but worth taking note of USD JPY trading at 159 and USD CNH slowly making its way higher as well. So there has been some news that the Japanese are going to intervene on their currency to stabilize the yen. Something else here from June 20th. Last night's pullback in ES and NQ are all NVIDIA related. That's from Financial Juice Elite. Sell-off in the ES and NQ last night, all down to NVIDIA. Can't blame the bulls for banking some gains when you have a company with a market cap of over $3 trillion and has a close to 30% rally in less than a month. You'd probably want to bank some gains. Worth keeping in mind, choppy price action is the baseline expectation for a week like this, and with quad witching coming up today, the chances for two-way volatility is much higher than usual. Some of our other headlines here, Forex headlines. Odd strength, quite a surprise this week. That's from Financial Juice Elite. The recent weakness in the Chinese onshore yuan is another thing that makes the Australian dollar strength seem out of place. That correlation isn't perfect, but weakness in the CNH, which is the Chinese Chinese yuan, is usually a negative driver for the Australian dollar. Looking at the chart, we have the USD CNH white. I don't know how well y'all can see this, but I will blow it up if you're watching on the screen. And a currency index for the AUD, which is in blue. Notice the clear divergence, and specifically this week's move. This also feeds in the divergence with copper prices as well. After this week's Royal Bank of Australia, which didn't offer any surprises, markets have shaved off 10 basis points of easing from the bank and now sees minus 6 basis points of easing by year end versus minus 16 at the start of the week. If that is what has driven the odds rally, I would think most of that should be in the price. Bottom line, I don't trust this AUD, this Australian dollar move. No clear tradable opportunity on this for now. Just an observation. Okay. Currency pair interest rate expectations. This is from Financial Juice Elite. And we can see here a table of the currency pair. Okay, that's going to be from Financial Juice for June 20th. Let's head over to Tradingview and look at some of our top headlines. I'm also going to show you the position that I have, and I'll tell you why I've taken that position. Okay, guys, we are over on Tradingview now. We're on the market news. Let's see if we can get some index headlines. I'm looking for top headlines. We don't have it. Okay, guys, we're going to start with the indices headlines and see if we have anything interesting here. China stocks track global markets lower amid strong outflows. On the right side of my screen, you can see current market prices. Pakistan benchmark share index crosses 80,000 points, up 1.5% at record high. Let's see, dollar backed by Dove with sharpest claws. Okay, and this is going to be a look ahead in European and global markets from Kevin Buckland. King dollar is exerting its authority to end the week at new heights. The yen, in particular, has been put in its place, sinking past the closely watched 159 per dollar level last seen in April, when Tokyo was forced to spend a chunk of money on currency intervention to yank it back from the brink. The catalyst for the greenback's overnight surge wasn't any strong data that would have compelled the Federal Reserve to keep rates in place for longer. In fact, the latest round of figures on housing and the labor market were relatively soft, invariably soft, and economists forecast another weak reading for the U.S. leading index on Friday. Instead, it's by that contrast to major global central banks, the Fed looks positively hawkish. Even the Bank of Japan, an outlier in hiking rates when its peers are cutting or standing by to cut, came across as dovish last week by kicking a decision on quantitative tightening to its July meeting. The Bank of England now looks poised to start cutting in August, and the Swiss National Bank is setting the pace with 2 consecutive reductions. The Fed could still hardly be called a hawk among doves, more like the dove with the sharpest claws. The dollar's surge against major currency rivals on Thursday was enough to put it on course for a third straight winning week, but only barely. Let's have a look at the dollar index, and we can see that that is, in fact, the case. Away from the currency markets, there's been little support from the easy policy outlook. Equities in Asia, at least, are set to end the week with a whimper, with flat performance for Japan's Nikkei looking like the best market in the region. Chip stocks have been sold off everywhere, arguing for more of the same when Europe gets underway. Considering the 1.5% or so gains so far this week across the FTSE, DAX, and Stock 600, there's certainly room to fall. Key developments that could influence markets on Friday: UK flash PMIs, June, retail sales in May retail sales, France, Germany, Eurozone flash PMIs, US flash PMIs, June, and leading index in May. Okay, so heading back over to Financial Juice, I want to show y'all Financial Juice here for a second. All right, so Financial Juice, if we're looking here on the left side of the screen, you can see that UK retail sales are coming out, and those are marked important. So UK retail sales are coming out here in the very near future. Some of our latest headlines read: oil prices set for second week of gains on signs demand is improving. Okay. Let's head back over to Tradingview and see if we have any other headlines. Okay, we are back on Tradingview. See if we have any Forex headlines worth noting. Japanese yen approaches intervention levels. This is from Trading Economics. The Japanese yen weakened to around 159 per dollar, approaching the 160 level that prompted authorities to intervene in the currency market in late April. So let's have a look here at USD JPY. You can see that USD JPY is trading around that 159 mark. So we're right around with that mark that is being talked about. Okay, and then these are the yen futures. So, Japan's top currency diplomat Masato Kanda said the government stands ready to take further actions against speculative currency movements, while the U.S. Treasury added Japan to a list of countries monitored for being currency manipulators. Those moves came as the Bank of Japan refused to scale back its massive bond purchases at its policy decision last week, saying it will release a plan on winding down its bond buying program at the next policy meeting in July. Meanwhile, data show that Japan's annual headline inflation rate jumped to 2.8% in May from 2.5% in April, the highest reading since February. The core inflation rate also accelerated to 2.5% from 2.2%, but came in below forecasts of 2.6%. Okay, guys, let's have a look at some of our bond headlines, see if we have anything we want to note here. Investors prime for Bank of Japan by shorting the short end of bonds. Okay, guys, let's see if there's any other headlines here before I get over to the charts. South Korea shares set for first weekly decline in 4. Oil prices set for second weeks of gains on signs demand is improving. This is from Reuters. Japan's May core inflation rates keeps rate hike outlook forecast intact. U.S. crude and gasoline inventories fall. Article goes on to read, crude oil futures were little changed on Friday, but were set to rise for a second week amid signs of improving demand and falling oil and fuel inventories in the U.S., the world's biggest oil consumer. Brent futures for August settlement dipped 15 cents to 85.56 a barrel after rising 0.8% in the previous session. U.S. West Texas Intermediate crude futures for August delivery was down 14 cents to 81.15 cents per barrel. The July contract expired on Thursday at 82.17 a barrel, up 0.7%. Prices have risen about 5% since the beginning of the month to the highest level in over 7 weeks. The seasonal demand increase, as shown by the latest EIA data, renewed confrontation between Israel and Hezbollah and the hurricane season could sustain price strength into the summer, city analysts said in a note. U.S. government data released on Thursday showed total products supplied, a proxy for the country's demand, rose by 1.9 million barrels per day on the week to 21.1 million barrels per day. The data from the Energy Information Administration showed drawdown in U.S. crude stockpiles by 2.5 million barrels in the week ending June 14th to 457.1 million barrels, compared with analysts' expectations for 2.2 million barrel draw. Signs of stronger demand also in Asia also boosted sentiment. Oil refineries across the region are bringing back some idled capacity after maintenance. Data released on Friday showed Japan's core consumer prices last month gained 2.5% from a year earlier, growing from the previous month and keeping the country's central bank on track to raise interest rates in the coming months. Weighing on prices were U.S. data released on Thursday that showed a decline in new unemployment claims, which may lead to the Federal Reserve to keep interest rates unchanged. Higher interest rates typically limit economic growth and, in turn, oil demand. Okay, guys, let me head over to the charts and show you a position I've taken. So I am back on a Topstep reset. I'm trading a 150K Topstep Tradingview account. I busted the last one, so I reset it. I am long yen futures now. As you can see, I'm long 5 contracts of yen futures on the idea that the Bank of Japan is set to intervene to prop up the yen. So yen futures have been crushed, as you can see here on a chart from a technical perspective. We are well below. We're below the second standard deviation Bollinger Band, well below the 20-period simple moving average. Week over week, we're way down. And then from a fundamental perspective, the Bank of Japan is likely to intervene to prop up the yen. So for those reasons, I have taken a long yen trade. Okay, now let's head over to see our losers. So we can see that natural gas and overnight trading is trading down 0.91%. No latest headlines on that news. Wheat futures are our biggest gainer in the overnight session. The latest headline reads, wheat heads for 4th weekly loss as supply improves. So we're looking here at 4 straight weekly losses from a technical perspective on wheat futures. Gold is up in the overnight session. Latest headline reads, gold set for weekly gain on U.S. rate cut optimism and geopolitical roles. So looking here at the daily perspective on gold, we can see that we're set for our 3rd bullish day and our 2nd bullish week here on gold. Gold trading right now at 2376.1. And gold, from a fundamental perspective, is looking higher on rate cut optimism and geopolitical woes. Some of our other items I want to look at here. Silver. Silver is currently trading at 30.665, above that 20-period simple moving average. We should see continued strength in silver if we are seeing it in gold and other precious metals. Now looking at the dollar index, dollar backed by Dove with sharpest claws. So as you can see, the markets are treating the dollar with more strength than other currencies. Dollar currently trading down 0.115 or 0.11%. Overnight trading at 105.2. Let's have a look at some of our indexes. First, we're going to look at crude oil. Oil prices set for 2nd week of gains on. See here, that is the case. 81.23 right now, trading down 0.06 in overnight trading. Oil looks like it's overall staying above that hourly 20-period simple moving average. We keep making higher highs, higher lows, which would indicate an uptrend. So if I were to play oil right now, my recommendation would be to play oil from the long side. Okay, guys, NASDAQ futures are currently sitting a little bit flat after a pretty down day yesterday, trading at 20,071 spot. So we'll say 72 evens. Market trading a little bit higher here, marginally up 40 points in the overnight session. All right, guys, that's going to cover it. Our main headline today is yen futures are reaching intervention levels. So I would say that's our main headline. You can also see that on seasonal demand and some other geopolitical risk, crude oil futures have been up. Gold has gotten a little bit of boost off of geopolitical risk. And what do we see here? Gold sitting up a little bit on rate cut optimism. So overall, guys, we're seeing gains in gold. Losses in the overnight session on silver, but overall, silver has also had a sympathy play with gold. Yen futures, I think, are our biggest headline, reaching that level where the Bank of Japan might intervene to prop up the currency. The Japanese have also been put on the U.S. Currency manipulator watch list. So I think that those are our biggest overnight headlines. All right, guys, if you like this content, if you like to keep up with the futures markets, keep up with the latest headlines, keep up with what I'm seeing in the market, please make sure to like, comment, subscribe. And if you're going to trade a simulated account like a Topstep, my favor to ask from you is please make sure to use the affiliate link in the description box below. That helps me out, supports me financially, make sure I can keep uploading content like this, make the dream come true. So thank you guys, and y'all have a good one.